Okay. Hello. How you guys doing? So we're a couple hours to New York Open. It's been a very long time since I did this kind of videos. I haven't done weekly reviews in a very long time. So bear with me. Subscribe to the channel if you're not subscribed. Like and share the video. Yeah, so let's get to it. Let's break down gold, and then we're going to break down Euro USD on our next video, and then we're going to break down some other pairs. We're just going to create a several series of videos where you can just go and check the pair that you want to trade. So let's start with XAUUSD. Okay. Before that, okay. We can see crypto has been up, but Ethereum today has started dropping, but it was up. It started dropping, so literally we're seeing a retracement. But I expect crypto like Bitcoin, I expect it to go up to 120,000. That's then okay. Let's look at commodities. Crude oil is down, slightly down. Commodities are not moving that fast; they're just slow. So natural gas is up 1.6%. That is good. That is actually high, so it's good. Brent 0.22, and crude oil is down. Okay. Forex Euro USD is up, as I told you. GBP USD is up. AUD USD is up. NZD USD is up. Yeah. So we're expecting the Euro USD, GBP USD, all this to go up, and we expect the JPY pairs to be dropping down. Okay, so we're expecting some sells. I tried to take a sell on Friday, took a loss, but the market eventually, I think it went to my direction. I just got upset and it closed. Yeah, let's get to the COT data. The COT data is telling us that okay, my main focus is usually on non-commercial, the large speculators, non-commercial, the large speculators, right? The non-commercial traders. I do not focus on the small speculators, the non-reportable, because these are retail traders. Okay, so we want to just see what is happening in this with the large speculators. These are institutions and all those. So previously, if you remember, I actually shared a file with the group. I did not share it on YouTube. So previously we had seen that XAUUSD had started dropping from this 380,000, 389, or is this 300? Yeah, from this 380,000, and we saw XAUUSD starting to drop until we reached the 2,280.82. So that means the long positions were dropping, but you could see that the short positions were increasing. Now, overview, if we're now checking, we'll now notice that the short positions are decreasing. Look at that. Short positions are decreasing from the 40s to the 30s. Short positions are decreasing. And look at the long positions. We're now coming slowly from this 200,000. We're now increasing 312, 337. So next we're either at 330 or 360. So the net long positions are increasing. So what are we supposed to do? We're supposed to be thinking bullish. Okay, we're supposed to be thinking bullish. If the large speculators, if the institutions are bullish, we are also bullish. That's how we should be thinking. Okay, 59% is up. Okay, they're bullish. Let's check on the volume. Gold volume. Okay, let's check on the volume. You could see that in December market was dropping. The volume was dropping. It maintained around this zone, so we could see consolidation or something of the sort. But let's say starting from the 2nd, starting from the 2nd of January, we can see clearly that volume started coming in from the 2nd of January, and exactly 8th of January, that's when major volume started coming in. So this tells us that now we should be thinking highly about more buys. Okay, we should be thinking more about buys. Look at this. Volume started coming in, we had a slow drop, but volume came in, and now we're seeing slight gradual increase. So this tells us that even the moving average is also increasing. So this tells us that we are seeing more long positions coming in. So we're looking for longs as always. We now go to the chart, and then just quickly breaking down, and then now we get to the charts. So I've marked out key areas where we saw significant market shifts. So right here we saw this change of character that happened. Where was it? It was around here. Yeah, this was the change of character that happened here, right here. So we saw this change of character. Let me just mark it out so that you can see it. This was in the November-December time. We saw this change of character. This was around when Trump was being sworn in. We saw this change of character. Market dropped over 1,000 pips, and I had said this market would drop over 1,000 pips. We took this trade. We saw this change of character. Market started dropping, giving us bearish sentiment. You could see that it was creating lower lows and lower highs, lower lows and lower highs. Then we saw the market now trying to push back. Okay, trying to push back, creating. We saw now another change of character that we saw this being taken out, but eventually the market came back, creating a lower high, right? A lower high, because now it was starting to be bullish. So we saw a lower high being created right here at this fair value gap right here. Okay, let's just go through it quickly. This fair value gap right there, we saw the market creating a lower high right there. Okay, so the market came back after liquidating. So we saw this where is it? This right here, this change of character that happened right here, or you can call it a break of structure, but it's a change of character because we came from a downtrend. Now we were pushing bullish. So this is another change of character. We saw the market now shifting its trajectory. So we expected that after the market does this, we're going to see the market come back. Okay, come back to mitigate into a certain level. So it's either to mitigate into an order block, or to mitigate into a fair value gap, and the nearest is a fair value gap. So what happened? The market pushed upwards, did not come back. It actually pushed solid straight to the upside. Then it went instantly, liquidated, went and took out this liquidity that was right here. Okay, we saw it come and grab this liquidity right there. Beautiful market structure right there. Then we saw it come back. Okay, then we saw it came, took out this liquidity that was resting right here. Obviously they were sellers, or someone who was waiting for the market to get in. Maybe they saw this as an order block. Market took them out, and now it came into this key zone where we saw this was previous support. This area was previous support. We saw the market previously, here it is, the market was support. So this area was support. This entire area acted as support until we saw this breakout and retest. So this means this entire area, including this zone right here, this is support. So the market came into this, tapped into this, completely into this support zone. Let me just mark it out so that we can clearly see it. Okay, so you can clearly see it, exactly what is happening right there. Okay, something like that. Okay, that is the support zone. Yeah, so the market has been playing around this zone. You can clearly see that the market was playing this zone. This was a support zone. So the market came back into this support zone, support turned resistance after liquidating this area, came back into it, and then pushed down to now mitigate into, after taking this liquidity. So we saw the market now drop down. Okay, so let's say this is the entry. We saw the market drop down into this fair value gap right there. Okay, beautiful 1:3 type of trade into that fair value gap, and okay, into that fair value gap or this order block. We could decide to put it there just for stability or something of the sort. Yeah, so the market did that, came into this zone, and then now started pushing to the upside, went back into this key zone, and leaving, this was left here. This was liquidity that was left here. This was also liquidity that was left here. After the market mitigated into this zone, we saw the market come back, take these traders out right here. Okay, there was also liquidity that was resting here. Let me just mark it out so that you can see it right there. Okay, there was liquidity that was resting right there. We saw the market take it out, and then came with a strong bearish candle, and then left a fair value gap. Market came back into the fair value gap, retested it, and continued downside. Broke, took out this liquidity. Let me just mark it out with maybe something like this. Sorry about that. Okay, something like this. Just a minute. Yeah, something like this. Okay, so that will signal there was money there. Okay, there was traders who were waiting to do something there. They were waiting to trigger. There was money around here. Obviously, there were traders who were trendline traders who were expecting that this market will end. The market came and took them out. That was liquidity. So the market came and took them out. Let me mark this also as liquidity, okay, so that you understand this more clearly, because we always seek to liquidate and mitigate. But right now the market is strong bullish, so we're just going through an overview of what has been happening, and then we continue until today. So the market came, took this liquidity. Now we are expecting that the market would buy, right? We're now expecting that after the market has taken this liquidity, we're looking for our entry. Okay, looking for an entry. What happened? Market came into this key support zone. You can clearly see this was resistance, then it turned into support, market came back. So this was support. It came instantly into this support zone that you could say, obviously this, you could call this an order block or something of the sort. Came into it, we saw a push to the upside, double bottom. Market came, broke out of this high that was created. So beautiful change of character right there. Beautiful change of character right there. We're just going quickly through it. Okay, beautiful change of character. Let's also mark this out as okay, so you understand it more, you understand the markets more clearly, right? So it came into this, gave us this beautiful change of character. So I'm going to mark it out just like that. Okay, sorry about that. Okay, so a beautiful change of character was created right there. Beautiful. Then the market came back in. There was a fair value gap that was left behind right there. We saw the market come back into it. There was also this order block, but let's just focus on this fair value gap. So the market came into that fair value gap and pushed strongly to the upside. But for me, I do not take trades mainly based on change of character, because you don't really know what could potentially be happening around there. So you're seeing like this zone, what happened here, it came and stopped out. It stopped out the traders who took trades based on this fair value gap and continued to the upside after this. So we missed that trade. Actually, I would have been taking this trade. I would have been one of those who took this trade, but obviously my stop loss would have been somewhere around here. It's usually wide, but yeah, so we missed this trade, but we could see now the market started creating. We saw now a change of character right here. So a beautiful sorry, not change of character, but rather we saw a break of structure. So the market started creating higher highs and higher lows, Actually took this liquidity same way it took this liquidity, it also took liquidity right here. You can clearly see that right there. Market came and took that liquidity. Beautiful. You see, so that's how traders get stopped out. I would have been one of them, but I wouldn't have been stopped out because I would have placed my stop loss somewhere right here, usually distant away. Those who trade with me know exactly why I usually use it's because of scenes like those. So either way, this liquidity was taken. Break of structure right there, beautiful. Let's mark that. Let's just mark that break of structure. Okay, beautiful, beautiful, beautiful break of structure. Then the market came back. Okay, the market came back into this fair value gap, into this fair value gap. There was two fair value gaps right there, but into this fair value gap, the second fair value gap. And there was also an order block right there, but you can see, so this entire, let me just mark it out so that you can see it more clearly. This zone right here, this zone right here, this was a beautiful entry zone. Okay, that is demand. Okay, this was demand. Market came into it. We took this trade. So the market came into this demand zone. Beautiful, beautiful trade. We took this trade. Set 1:2. Targeting, we were targeting 2160.5. 60.5 was that. We took it at 60.5. Sorry, not 21, 27. 60.5. That's where we had targeted. Okay, just put it there. Okay, this was our target. 1:5.19. Beautiful trade. We achieved it. I'm going to post a screenshot. I did not say take profit. I did not say take profit because I usually leave a runner. So when I'm taking profits, I usually reduce my position. So that's why I don't put take profit unless I know that I'm targeting maybe 1:2, very small amounts of movements. That's when I put take profit. But when I'm swinging, I usually just know this is my target. So when it gets there, I'm going to close. So that's exactly what we did. We targeted here. That trade, I think I'm going to post a screenshot right there quickly. Break of structure, so we can see clearly that the market started creating a beautiful, okay, beautiful right there, okay, beautiful trend line. So we could say something like this, okay, because this is also the start of the trend line. So that is a trend line, and there's also this trend line right here. Okay, call this a trend line within a trend line. Okay, this right here, call that a trend line within a trend line. There, right there. So clearly you could see that the market now started creating a beautiful trend line. You can see that I don't usually trade trend lines, but yeah, now we expect the market to come into this resistance zone right here, into around this resistance zone. Maybe we'll see a rejection. Around this this resistance area right here. Okay, we could potentially see a rejection around this resistance area. Maybe not. Maybe not. But yeah, we will see a rejection around there. Then the market obviously will try and break out. But for now, let's just say we're going to see a rejection from this area because we expect strong bullish momentum. But we came from this order block that was right here. Sorry about that. We came from this order block. We actually took this entry. We are running a sell position. A screenshot will be posted right there. So let's go quickly. We took that sell. Our stop loss was we were actually putting our stop loss at 90 because I had said if it goes above 85, I'm closing. I'm not continuing with the trade. So our target will be roughly around here. Okay, beautiful 1:3 trade. We're waiting for a further drop into this zone. So 27.46. We're waiting for this. This is exactly what the trade that we actually running right now. So we're waiting for 27.46 and then 27.46, 27.50, 27.54, around there, because this entire zone for me is let me just enlarge it quickly so that you can see it. This entire zone for me is what do we call it? It's resistance. It's, sorry, not resistance, it's a demand zone. This entire zone is demand for me, because there's a fair value gap right here. We could see market react from this fair value gap. You never know, but I'm running on break even. You could see market react from this fair value gap, or we could see it come into this order block, because there was this break of structure. Let me just mark it out so that you can see more clearly. There was this break of structure right there. Okay, let's mark it out. Break of structure. Okay, now this break of structure was created. This break of structure was created by this candle. This candle is the one that prompted this move to the upside. After this candle, we saw the move to the upside. So this is demand for me. This is demand. So the market could decide to come into this zone. So actually, we are going to look. We're going to seek to take profit somewhere just around there. Somewhere just around there, 54. Around 54 right there. We're going to take profit around there. Beautiful trade. 1:2.33. That is mainly where we're going to be taking profit, but we expect that the market would maybe decide to drop into, so let's just say the market would come into this zone. Let's just get something like this. Okay, right there. So we expect that the market would come into this zone right there, and then we see a push to the upside. Just a quick analysis. I hope you understand everything that I'm talking about. Break of structure. For those, when the market is creating high highs and high lows, it creates break of structures and change of characters, basic price action, and also when it's going to the downside, lower lows and lower highs, it's also doing that. So it's always important to actually make sure you understand exactly when the market is creating this, because you can use that. I'm going to create a video, or I'm going to go live with you guys just to explain about this break of structure, change of character, so that you understand how to take trades from them. I've given you guys some entries on my. I give you guys some entries on my Instagram. I've given you guys videos explaining this, but yeah. So when the market creates a break of structure, we always expect it to come back into maybe a demand zone. Like here, we could probably say there was probably a fair value gap on the lower time frames or something of the sort that prompted this move to the upside, or we could say it was just a reaction from this candle. But this candle wasn't the one that, maybe we could say this candle was the one that prompted this move to the upside, but I wouldn't say that, because there's this still candle right here. So yeah, probably it was this candle. Actually, we could see, we could take it as this market was seeing something like this. Okay, you're seeing this, the market saw something like this, like it was creating movements like this. This is exactly why it came back into that zone. Okay, then that prompted that move. You can see that prompted that move. So when the market came back, it decided to come into this candle that prompted this move. Beautiful. That's now understandable. Right there. Let me just mark it out so that you can see it. So this candle right there, and you can see it was exactly a tap into there. That's where the market settled. Beautiful. And started pushing to the upside. So when the market creates break of structures, we expect a reversal into maybe a demand zone. Like this area right here, there was this fair value gap. Okay, so we saw a break of structure, then the market gave us this candle that came into this fair value gap that was left behind right there. Let me just show you the fair value gap so that you can see it. Just quick education right there. So the market come into that fair value gap, and boom, the market went to the upside. So that's how you take trades based on this. When the market's creating high highs and high lows, but you actually need to be able to, like this area right here, if you couldn't see that, because I haven't seen that clearly. So if you couldn't see this, then you wouldn't know that this was actually the zone that was going to prompt this market to the upside, but it did. So yeah, so we saw the market come back into the zone, go back. So now we saw the market come back into this fair value gap right here, okay, giving us this high. So this fair value gap right here, I know you can see it. There's this fair value gap right here. So the market came back into it, mitigated into it, and then we saw this push to the upside, taking the liquidity that was resting at this break, at this zone, now creating for us a break of structure. So we expect that the market will come back into probably this order block right here, or this area, because this area for me is this is the area where there's demand. Okay, this is the area where there's high demand, but it could decide to even move just from here. But this is the area where there's high demand, so we're going to be watching for that zone. Let's just check on fibs. So like this, yeah. And then we take you can see clearly right there. Okay, I don't want to make this video long. Right there. So this area right here, exactly where that candle is, that is our demand area, where we're going to be expecting that there's going to be movement. So 0.6 and 0.78 right here, 618 and 0.71 71. So this area right here is going to be our demand. So yeah, we're going to be looking at the behavior of the market within this area, but this rests at a very, very good point, 0.78. Let me just show you. Okay, right there. Okay, 0.786. Let's just mark it out so that you can see it more clearly. Right there. Okay, quickly, 0.786. And this one we're going to put it at the right there. So it rests at a beautiful point. Okay, it rests at a very beautiful point of interest for us. So we could probably say 0.618. Okay, so it rests at a beautiful point of interest for us. So we could potentially say we're going to wait for the market. We're going to target this as our take profit for the sell, and then we're going to wait for the market to come into this zone. So long position, we're going to wait for the market to come into this zone. I really love this area right here. So we could say we wait for the market to come into this zone and maybe give it room, because it could decide to actually take liquidity from this area. There's a fair value gap right there, there's an order block right there. So we're going to put our stop loss slightly below this zone, somewhere like here. It's wide, but it's a good stop loss. Okay, it's wide, but it's a good stop loss. Then we target 1:3, 1:3 or 1:2 point something. Let's just target 1:1. If we target 1:2, we'll get right there. So yeah, we can target 2800 flat. We target around there, 1:2 point something. Beautiful trade. But we know the market, if it breaks out of here, we're going to see maybe a retracement and a continuation. So let me just show you the path. So we could potentially see a breakout, push, and then a continuation to the upside, something like that. It's possible we could see something like this. Okay, it's possible we could see something like this. So we're not going to fully close at 2800, but that is a major resistance area. So we are going to close majority of this trade. We're going to protect majority of this trade, maybe 70%, maybe 80%, depends, maybe 90%, because I also have this position that I'm still running. So I'm good if I close even 90%, it will be good. Yeah, so there's that. And then yeah, so we expect 2800. We're going to target 2800, but you could leave a runner to continue to the upside, targeting 3000 eventually, but not today. Eventually we're going to see that happening. So, but this is the area that we are going to be seeking to maybe take entries from. Probably if you want to widen, you could even decide to widen your stop loss to somewhere around here, but I wouldn't advise on that. But here's why I would say that, because there's this fair value gap. It was mitigated, yes, but sometimes you see the market, if it takes this liquidity, it could decide to come back, but it won't break through this. Probably it will come into this order block. and then we see a shift to the upside. So that's why I've said let's just put our stop loss slightly below that. Let's make it something like somewhere around here, just slightly below this candle, somewhere below this candle, somewhere like there. It's safe. Okay, it's a safe place. 1:2 flat right there. Okay, that's a safe stop loss. This right here is a safe stop loss. 1:2, beautiful. And then you can leave your runner. The runner can give you more. I'm going to show you. If you have seen, we took this trade with 0.5. This was a 0.5 trade, and the 0.5 continued to the upside, gave us some beautiful results, and we took like 90% of it and left 0.1 running. So the 0.1 that is running is still running beautifully. I think you can see a screenshot. You can see the screenshot or something of the sort. So yeah, just like that is the same thing we're waiting for. We're waiting for this market to come here. We're going to maybe leave a small runner because we never know what could happen. We're going to leave a small runner on this trade, maybe 0.1, maybe 0.05. It depends. But here we're going to take another 0.5 trade and then see how it goes to the upside. Beautiful trade. So XAUUSD, we're waiting for a bullish momentum. We're waiting for a bullish momentum. I hope you capitalize on it. Make some money. Next week will be a beautiful week. Okay, I hope you have a blast. Like, subscribe, share, and do what you gotta do. I'm out.